Welcome back to Vantage. The space economy is booming. We are very, very lucky to have a specialist investor who is looking at this really exciting, innovative space. Let's go take a look. Welcome back to Vantage. I am delighted to have Mark Boggett here with us, returning to the Vantage cameras. For those who don't know you, could you just give a quick introduction to Seraphim Space Investment Trust and yourself, and then we'll get into the story.
Well, it's great to be here again, Neil. So I'm Mark Boggett. I'm CEO and co-founder at Seraphim. And for the last 10 years, we've been growing to become the most prolific investor in the space market globally. So we have the investment trust, which is our growth-focused operations. We have an accelerator and a venture fund. So we have three elements to our overall business, all of them focused around space, filtering globally the best space deals that we can see and investing into these businesses.
Excellent. And I mean, one of the reasons I was really keen to sort of get you back on the cameras is that I noticed that in January there's this sort of spike in the price, and I was just wondering, you know, this strong rally that you've seen effectively in the first quarter for Seraphim, what is driving that?
Well, I think first of all that investors came back after Christmas and the New Year and sat at their desks in a more positive mindset about the macroeconomic outlook, and we're looking for stocks that were oversold. And I think that we could say that we were very oversold. Yeah. You know, I think we had the widest discount in the investment trust market. So that began to narrow, and that began to get some momentum. And then we then brought out our results, which were a good set of results. Yeah. So that then continued the momentum of the business. There was actually some profit taking, but we're now back on a sort of positive trend again. So I think it's a combination of improving macroeconomic outlook. There's also the sort of defence element, and we'll talk about that some more. But that really is driving. And then we've got a really good set of results, and it really sort of paints the picture for where the portfolio is going over the year ahead.
Well, let's take a step back and go into the sort of bigger picture. So clearly, we've seen space economy, the estimates around space economy grow over the last few years, etc. The economics are getting easier, etc. What are the main themes driving demand for space tech services, such as defense, climate change, insurance? How's that evolving?
So, well, space is at the nexus of a whole range of megatrends. Mm-hmm. So space is the ultimate high ground. So you're able to actually look at what's going on the planet in new ways, using new sensors to provide a visibility of Earth that's never been seen before. And that's not just about Earth observation, it's around communications as well. We've got huge success stories evolving, such as Starlink. Mm-hmm. So this is driving growth areas like defence, and it's also driving areas like climate and sustainability. But it also covers a whole range of other growth areas, such as autonomous mobility, smart cities. So these are in their own right huge growth trends, but space is accelerating those trends. So when I think about space, rather than thinking about it as a sector, it's more like a facilitating application. It's more like AI. Yeah. It's applicable to virtually every sector. So the underlying sectors that are sort of that are being most driven at the moment are sectors like insurance that you mentioned. Mm-hmm. So this is about finding new ways to evaluate the risks, to monitor the assets, to evaluate claims using this new data set that previously wasn't available before. And this kind of data is being used in every sector. There really isn't a sector that can't benefit from it, but what we're seeing right now are the early adopters that are really benefiting. And right at the front of that queue is really defence, and that is really the industry that's really driving the performance of our portfolio at the moment.
Okay, interesting. And I mean, you touched on the fact that that there was this wide discount on the trust. I'd love to understand your sort of capital allocation priorities. So you've got a group of very interesting companies and new prospects. So new follow-on investments versus actually buying back your own discounted sort of shares.
Yeah. So our shares got into 30-something pence last year, and the board agreed to start a share buyback program, which actually worked very well. And the shares sort of rallied back to 50 pence. for the period of time that we were buying the shares. As soon as we stopped buying them, the shares sort of reverted back to their previous price. So we've been through this exercise to see whether we can buy back shares, and it hasn't really worked. So the board are keeping these options open on the share buyback, but as the manager of the fund, we think that the cash resource is better focused on the actually underlying portfolio and new investments. So the portfolio is very well financed. And one of the big announcements that we made in the last results was that the portfolio, as measured by NAV, 60% are now profitable, or they've raised sufficient capital in order to reach cash flow break even. And the balance has got an average of 12 months of funded runway. So this is a portfolio that's very well financed. So we've looked at all of the portfolio companies, we've looked at the companies that we want to support and need to support, and we've allocated capital to them. And then we've got some capital left over in order to be able to continue to make new investments. So the bottom of the economic cycle is the very best point to be making these investments. So we've made a new investment during the last quarter that we'll talk about. And I think it's a great example of the things that we should be doing with our cash rather than just simple share buybacks.
And as you go and talk this story to investors, I mean, where does it resonate? Is it, sovereign wealth funds, private equity? It's an interesting niche, and you're a specialist in this interesting niche. That's right. So do people rely on your expertise, even if they're a big asset manager houses, etc.? Where are you finding most interest?
They do. So we have been doing this for 10 years with a global market leader in terms of the volume of deals that get invested. We put a lot of publications out there. We do a quarterly index. We've been doing this since 2017 that tracks all of the private investment flows into the different sectors of the market. So we've always got a good understanding of which markets are growing, which sectors are growing. But we also do something which is the space sector map. Each technology market has its own map, where the underlying market is broken down into the subcategories, and then the emerging private companies are identified. And we as an organisation categorically own the map for space, which we publish twice a year. So what basically happens is that when we publish that, we get a response from other investors around the world. So these are sovereign wealth funds, they're private equity funds, they're family offices, they're all types of different investors. And what typically happens is that they are looking at a business or working on a business that hasn't appeared on our map. And they get in touch with us and they say, we've seen your map, we think it's fantastic, but this company that we're working on isn't on it. Can you help us understand why? And we'll find out what the name of the company is, and we'll give them some honest feedback. Normally that feedback is run in the opposite direction and don't look back. And that's the reason why it's not on the map, because we've evaluated globally all of the companies that we think should be represented within that particular sector. So whilst no one likes to be told that their baby's ugly, while you're doing your sort of due diligence and evaluation of a business in a new area, if the specialist in that area tells you, to look elsewhere, that builds a rapport and relationship with that investor. So what then happens is, when they see their next space business, they get in touch with us, and we've got this relationship where we're being sort of asked to advise about the space businesses that they're investing in, which is great for us because it brings in deal flow. It's great for us because these are good co-investors, and this is what we've done with hundreds of investors around the world. So we've got this huge network now that bring us deals, and in return, we tell them what we think about them and whether they should be spending their time investing into those companies.
Yeah, it looks like a happy relationship.
It is. It works pretty well.
And if you reflect back on this last year, I mean, it was challenging in this sort of raising rates with inflation, and there was quite a lot of focus around the resilience of particularly sort of private company businesses and their valuations. So, when you're looking at the NAV, it's a natural question as to, what is that? How is that NAV represented? How resilient are the valuations of Spacetech businesses in the current environment? And when you're a good test of this is taking a look at the up rounds versus the down rounds. So what are you seeing at present?
Yeah, so as we reported in our recent interims, with the portfolio did 8 follow-on fundraisings, and half of them were up. No, actually, 75% were led by new investors. Yeah. So that's a good measure, that we've got new fresh money coming in, setting the price of the round. Of those investments, half were up. Well, they were flat or up, and half were down. Okay. Now, of those that were down, 2 of them deserve to be down. You know, these are businesses that didn't meet their own targets, and in a challenging environment, you know, you would expect that to be happening. So it's the normal course of business. The other one was a business that's doing exceptionally well, but their last round was raised in the peaks of 2021. So that financing round was 8% down. It was a big round. We thought that was a great result, because 8% down is doing better than the market, and we brought some great investors onto the cap table in that round. So that really sort of gives a good impression of what is going on in our sector. But just to go back to the point that I made earlier and underlining it, we've gone through this period now where the leading companies within our portfolio have become profitable. Yeah. So they don't need to access capital anymore. So that's 40% as measured by NAV are now profitable. And then another 20% on top of that have raised sufficient capital in order to not require any more capital, provided that management meet the targets that they'd set themselves for the year ahead. So if we look back a year, this year it's 60%, last year it was 0. So you can see a huge maturing of the leading companies within our portfolio over the space of the last year, and that is really solely down to the defence sector and the sad things that are going on through global geopolitics.
If we paint a sort of fascinating picture in terms of a really interesting time to look at the portfolio, if I asked you over the sort of next 12 months, what are the sort of key catalysts that investors should look for, what would you signpost?
Yeah, well, there's first of all sort of more of the same, which is that sadly geopolitics are continuing to move into the wrong direction. Yeah. And there are increasing fears between relationships between China and the US. Yeah. China and Taiwan. So what has happened during the course of the last 2 or 3 years is that defence organisations around the world have witnessed the capability that the new space companies, the type of companies that we invest into, are able to provide. And this capability is not a nice to have, it's a must have. Because if it's commercially available on the market, that means that their enemies can access this kind of capability. So there is a huge rush by defence organisations around the world to catch up and to access the latest capability. And then on top of that, they want to invest to actually improve that capability and make it specific to their own needs. So all of that's happening at the moment. So a race to access this capability. So a massive build-up of the order books of the types of portfolio companies that we've got. And then these organisations are then providing NRE, so non-recurring revenues, to focus and develop the technology in the direction that they're looking for. So that is going to continue at a pace. And budgets have been reset around the world for defence, 3 times bigger than they've ever been. And there's a sort of growing divide. So, for example, in Europe are investing more heavily than they've ever done before, because there's a growing recognition that they can't rely on the US anymore. Yeah. So they're building their own capability. So that's really important to my organisation, because their capability in space, sovereign capability, is really important to them. So there's huge amounts of capital that are being invested that really is sort of an underinvestment from decades that's now really playing catch up. So all at the same time, you've got defence around the world that are digitising their capability and catching up on the underinvestment of recent years. And space is really at the sort of the tip of the spear for what's being sought after, because it's very low cost but it's hugely impactful. And if they don't have it, they're at a risk. So that's what's going on, and that's accelerating, and that gives us great confidence that the portfolio is heading in the right direction. But all of the companies that we invest into are dual use. Only one of the portfolio considers itself to be a defence businesses. The rest of the businesses are defence businesses by accident. Yeah. Defence is the sort of first customer. Yeah. They've got a huge budget. They're motivated buyers, and they want the capability like yesterday. So of course these companies are focused on these demanding customers in the first instance. But what's going to happen during the course of the next few years is that they're going to grow beyond the defence customer into the other commercial markets, insurance and real estate and logistics. So whilst we've seen this great leg of growth where our leading companies have now got revenues up to and beyond 100 million, they've reached profitability, these companies are in good shape. They're really only scratching the surface because they're really still only really serving a single customer. And when they start to broaden out to the more commercial markets, that's where the next leg of growth is going to be coming from.
Okay. And then final question. So we picked up you've invested in a new business, Skylo. Yeah. Tell us a little bit about that and what was motivating effectively the investment, the drivers behind that.
Yeah, so I'm so excited about this business on a range of measures. So first of all, this is a business that we've been tracking for 2 years. Mm. So as we are tracking many of the leading space companies in the market. And what Skylo are focused on is on the telecommunications market. And what they are trying to bring is capability from satellites direct to your handset. So this is a software company that's focused on mobile phone handsets and being able to connect them to the geostationary traditional legacy satellites. So Apple really rocked the mobile network operator market by providing a direct to satellite capability on all of their iPhone 15s. This is only for SOS purposes, but really wherever you are, you're able to make that call if there's been an accident or you're in trouble. So that really set the market on fire, looking for that kind of capability from all of the other providers. And this is exactly what Skylo provides. So what they're able to do, and this is really based around a new chipset that comes to the market in the second half of this year, that's going to be put into all phones. So what they then enable is these phones, through roaming, to be able to connect to the traditional satellites to provide text messaging, and next step will be sort of WhatsApp messaging. So you will be able to send a text message wherever you are. And you know how annoying it is when you're on that train and you can't get that message to get picked up at the station, or you're on an aeroplane and you've just remembered something you're about to take off and you can't connect. But even during flight, you're going to be able to send text messages. So sat at my desk in central London, the phone doesn't work properly, and that's in a built-up environment. As you move into more rural areas, the needs grow significantly. So that is a massive market, a huge market based around our handsets. But there's an equally large market, or even larger market, around the Internet of Things. So just being able to communicate with at very, very low cost with loads of different objects around the world. So this is a company, as I said, that we've tracked for a few years. We joined in a round that was being led by Intel Capital, and we're really excited about what's going to happen over the next 6 months. This business has been positioning itself for this day for the last 4 or 5 years, and its market is just arriving in a matter of weeks, and we're really excited about the growth. This company's got contracts with all the mobile network operators. It's poised for very, very significant growth. And the management team believe that this round that we've participated in will be the last equity round that they require, because growth is going to come through in the revenues so quickly in this business. So I'm excited about this for the opportunity that we've got into a round like this. But I'm also excited as a consumer and being able to actually, sit on an aeroplane and send text messages or, to be able to use this. So really excited about this sort of the next development that we're part of in the space market.
Mark, thank you so much. Look, I mean, it's been so great to hear. Firstly, I think you've got just a fascinating role, right? One of the most interesting jobs around. And, there's such a great set of opportunities for you out there. So thank you very much for coming back to the cameras. It's always nice to hear good news stories. Wish you luck for the year ahead, and we'll definitely track your progress.
Thank you very much.